buying spot Bitcoin and owning that for, say, a minimum period of 8 years will give you a foundation of financial strength that you never knew possible. A level of financial freedom that allows you to have full control over your assets and be completely in control of your future. I would start with spot Bitcoin, holding it for 8 years. Once you've got a base that is untouchable and you're completely unbreakable from a financial point of view, then I would go out the risk curve and look at something like strategy. Only once you're completely set up and impenetrable would I look at the other things. But the only caveat to that is, if you have capital that's stuck in a system that doesn't allow you to buy Bitcoin, then sure, the second best alternative, turns out there is a second best, and that is owning strategy shares.
Okay. And if the treasury companies are outperforming Bitcoin, why would you advise your clients to buy spot?
Great question. Because there is inherent risk with owning those treasury companies. Yes, they're regulated, but there is counterparty risk. There's regulatory risk, management risk. You don't know if you're going to have a 6102 attack where the government just says, hey, we really love this. We really love this Bitcoin. We're going to assume the company and we'll give you basically cash for the Bitcoin that you're holding. All of a sudden, you don't have it. The problem I see is you want to be financially independent first. Once you get that foundation, once you get that base, then you can go out the risk curve with anything else. But until you get your financial house in order, pursuing anything else looks to me to be an outsized risk, because there is additional risk to purchasing these treasury companies as opposed to just owning Bitcoin.
Gotcha. So it's more so about the with spot, you're not going to get rugged. And with the treasury companies, there is risk because there's government seizure risk, there's operational risk, there's company risks. So it's like, focus on your spot stack. And then if you want to take on additional risk, that's where the treasury companies come into play. That's what you're saying.
Yeah, absolutely. And I look at this and I think, yeah, get the simple things done properly. And then once you've secured that, then you can have a look at it. And I'll just sort of, look at and discuss very briefly, the risks that are inherent with the treasury companies. 2 months ago, 3 months ago, the treasury companies were flying. Oh my goodness, look at the outperformance relative to Bitcoin. Unless you really understand the mechanics of the treasury companies, and this is something I find intellectually fascinating from a financial perspective, because we've never seen this. And being a Bitcoiner, it gives us a great insight into how these treasury companies are trading and how they're going to outperform. But, I look at this, and if you bought a treasury company 2 months ago, what you've seen with the MNAV compression, which is basically market cap over net asset value, has seen a total crushing of your equity in that stock, somewhere between 25 to 75%. You've seen your capital just evaporated. And all that comes down to is because, you purchased at a really high MNAV and you've seen a 75% compression of that MNAV. Now, the flip side to that is that there's opportunity if the MNAV's low and it expands dramatically to outperform Bitcoin, but you just need to understand the risks on the markets you're entering.
Yeah. Yeah. And let's talk about the MNAV, because this is something that Peter, as a Bitcoiner, has been, as a humble Bitcoiner who takes a stack sats, stays humble, stays solvent, puts that Bitcoin into self-custody. All of a sudden, 1 year on Bitcoin Twitter, you just kept hearing MNAV, 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 right? And, of course, I have to cover the news every day, so I have to educate myself on what MNAV even meant. But now you're seeing this compression of it, and I'm sure you caught this, Peter, where Saylor kind of changed the terms a little bit, right? And the MicroStrategy MNAV compressed to 1.5. What does that mean? Oh, and then not to mention that there are some companies that their MNAV is actually below 1, meaning it doesn't even make sense, because the whole point of owning a treasury company is because you think you're going to outperform Bitcoin. But if it's below 1, you're not, by definition, you're not outperforming Bitcoin. So what's your opinion on that? Because the way, from where I see it, Peter, and again, I lack the experience that you do. in traditional markets. But I was around for the 2016, 2017 era, and I was around for the 2021
Mm.
era. And I do remember that every single cycle, there is the thing that outperforms Bitcoin, right? So the 2017, it was the ICOs. The 2021, it was the layer one altcoins. And the 2025, I said this at one of the conferences I said this and they got boos in the crowd and whatever, but I'm sticking to it. It seems like the ICOs of this cycle are the Bitcoin treasury companies. Now, does that mean I'm talking about strategy? No. Does that mean I'm talking about 21? No. Does that mean I'm talking about Nakamoto? No. I don't think any of those guys are going to go anywhere because of the backing that they have. Like SoftBank and Tether, they're not going anywhere, right? But the smaller ones, right? The ones that take more leverage, they cut more corners in order to even get close to the big guys. I think that we have a downturn of 40 to 50%, and you might see a domino effect of a lot of these companies start to unravel. So like I said, I don't have experience in the financial markets, but I've been in Bitcoin for almost a decade now, and I've seen this story before. It looks very, very familiar. Peter.
Looks like a duck, walks like a duck. It's probably a duck.
Exactly.
Yeah. It feels a lot like that. And the only hesitation I have and nuance I'd like to add to that is that we have a buyer of last resort in the very strong treasury companies. So I think when you see huge appreciation in values, when you see outstanding performance in stocks, you're going to get the copycat effect, and you're going to see a whole lot of people enter the market without the relative experience or training or guidance or ethics and values that led to the success of their predecessors. So I think it's inevitable that we're going to have a whole host of these companies fall on their face. But why I think this is a little bit different to the previous cycles where it's been, say, Bitcoin miners, ICOs, DeFi, meme stocks, whatever you want. Twofold on this. Firstly, the underlying asset that they're purchasing is Bitcoin. And secondly, there's a perpetual bid from the strong companies in the space that if those poorer managed company ever fall below a 1 MNAV, there's a buyer of last resort. Think about this. Saylor can pick up these companies for a huge discount on what he'd have to pay on spot market Bitcoin if they ever get into trouble. So I look at this and I think as stupid as people will be in chasing these returns elsewhere, there will be a perpetual bid on it, so they won't get too hurt because the underlying asset that they're buying is Bitcoin. So I think it's very different to the previous cycles that we've seen. I actually think it represents a huge opportunity for the best treasury companies in the space to pick up discounted Bitcoin well below fair market value.
Oh.
And we're going to see those opportunities come up.
That's very interesting. So you think, wow, okay. So you think that but even the smaller ones, even the smaller Bitcoin treasury companies, you think that if they go below a 1 MNAV, you think that's a good opportunity?
I think it's absolutely a huge opportunity, depending on how quickly that they're accumulating Bitcoin and whether or not they can keep it. Obviously, want them to be operating in an ethical manner. One thing that I think's really been blown out of proportion in this space is the fear that Bitcoiners have had paying for a really high MNAV. And what's very difficult to understand about this, and this is putting a TradFi lens on absolute digital scarcity network asset of Bitcoin, is that this MNAV, you've got people who are paying, say, 2 to 5 times asset value for a purchase of a share. So what that effectively means, if you want 1 Bitcoin exposure in some of these companies, you're going to have to put in somewhere between 2 to 5 Bitcoin to get 1 Bitcoin exposure. Now, if the market stays still and they never accumulate another Bitcoin, that is the worst deal in history. You've effectively lost somewhere between 30 to 80% of your Bitcoin by doing that one trade. What I think gets lost in this is the best companies in this space are accreting Bitcoin per share so quickly that MNAV that you paid gets eroded very quickly. And so the thing I look at in assessing the viability of this moving forwards is what's the MNAV that you're currently paying, and how quickly, on a risk-adjusted basis, can they increase their Bitcoin per share to get your adjusted MNAV down to 1? So if you pay 2 times MNAV, how quickly are they doubling the Bitcoin per share to get your adjusted MNAV down to 1? Because once it gets to 1, any Bitcoin they add per share is now accretive to you as a Bitcoin. Let me give you an example. If you've got 10 Bitcoin and you buy 10 Bitcoins worth of Metaplanet stock today, and you're paying a 2 times MNAV, you've effectively halved your Bitcoin.
Mm-hmm.
Now, that's a huge disadvantage. Why would anyone do that? Well, let's see what they can do with that Bitcoin per share over the next, call it 2 years. They're expecting to increase their total Bitcoin treasuries by 10x in the next 2 years. And they're only going to have to dilute that by 40 to 50%. So you're getting a 5x return in Bitcoin per share, and it's costing you 2 times per share. So effectively, by my maths, simple, in my head, I'm looking at that and thinking, well, if you're willing to take that risk and you've got money or Bitcoin you're willing to burn and lose forever, if you take that risk, there's an opportunity that you can 2x the investment that you made in Bitcoin terms. And this is where all of the investments that I look at now have a hurdle rate of Bitcoin. So you need to outperform Bitcoin in order to justify any investment.
Of course. Wow.
But therein lies the potential opportunity of the Bitcoin treasury companies. But having said that, a lot of people are going to get burned on this. And this is why I just say the greatest message in Bitcoin is just stay humble, stack sats, go buy Bitcoin, self-custody, and let the future take care of itself.
Need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledn has been the trusted choice for Bitcoin-backed lending with transparency, security, and trust at their core. I absolutely love these guys, and I personally not only have an account with them, but also a loan. And some of the key features that I love about Ledn is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you can pay it back whenever you want. Essentially what they do is that they help their clients unlock the liquidity of their BTC, allowing you to HODL while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you today. Simply Bitcoin viewers get 0.25% off their first loan by using the link in the video/podcast description. What are you waiting for? Head over to ledn.io today.